Have you ever wondered what it would mean to live comfortably when you retire, or even have some extra cash to spend on a weekend out or on your family? Well, to answer this question, let's analyze the 18% of millionaires that reside within the United States. And as NASDAQ reports in 2025, all of these millionaires have reportedly have some sort of investments within the stock market. Meaning that if you want to attain true wealth, you must learn how to effectively invest your money and earn it back in a good manner via 3 effective stock market strategies that I will be going over in today's presentation. So for a quick agenda, first we'll be going over our introduction, then we'll be going over getting started, and then we'll be looking at the 3 key strategies that we will be highlighting in today's presentation. And as represented by CAAF.org in 2025, the 3 most important strategies that one must focus on if they want to increase and maintain wealth within the stock market include diversification, long-term investing, and last but not least, risk management. So for a quick introduction about myself, I have been involved in the stock market for more than 3 years now. I've also had many meetings and been to many conventions with a lot of professionals, and I've also even helped many individuals start out their career in the stock market by teaching them more about it and getting them interested. That's why, as I've curated this knowledge, I believe that I have attained sufficient knowledge to help guide you through your stock market endeavors. So let's get started with some key stock market terms, and firstly, we should start off with how you must start investing. Of course, to start investing, you must first set up an account. This can be either a brokerage account, which means that you go to wealth managers, including Charles Schwab or JP Morgan, or this could be actually utilizing applications such as Robinhood or E-Trade to go ahead and invest little amounts of money and wealth manage yourself. As far as some key terms go, stocks are defined as owning a piece of a company. Then we go to ETFs, which are basically a basket of stocks that track an index. Then we look at mutual funds, which are a collective amount of money gathered from many investors and then invested in either a specific company or a stock portfolio to increase overall shareholder value. Next, we're going to look at bull market versus bear markets. To look at a bull market, just think about how a bull looks down. In a bull market basically means rising, and the bear market means falling. Now, of course, let's look at dividends, with profits being paid out to shareholders. And last but not least, let's look at market orders versus limit orders, which is basically immediate versus price-specific stock purchases, which you can learn more about if you are to go through brokerage accounts or even trading applications. So let's see how professional communication ties in with the stock market, because oftentimes we seem to forget that the stock market is not only a place to curate your wealth, but it's also a place to curate your oral communications. To begin with, you are going to be giving presentations. For example, if you're starting off as an entrepreneur and you want to invest and bring up your own capital, you would be giving presentations in front of many individuals. Second, you will be discussing a lot of things in meetings. You see, especially if you're going with brokers such as Charles Schwab, for example, you will be talking to them, having meetings with them, and really learning how to professionally get yourself into having a conversation in this world of stock market. And last but not least, you'll be having client interactions. Now, of course, clients could mean anything. And you yourself could be your own client as you are managing your brokerage account on applications, or you could be a client of, again, brokers such as Charles Schwab, where you would also learn how to interact effectively and utilize oral communicative skills, including the skill of, again, presentation and effective listening to ensure that you are getting your money's worth. Now, moving on to, let's go on to the first strategy that we must analyze in this presentation. And that strategy is, of course, diversification. You see, diversification, according to the CAF, has been one of the most effective strategies in mitigating any harm that could be done due to a crash of specific industries or specific stocks. Basically, if you want to think about it, if you were to only invest in specific technological stocks and they were to crash the next day, that would cause your whole portfolio to crash. However, if you were to buy many types of industries, including oil or semiconductors, instead of just focusing on tech, maybe you can have a more diverse portfolio, so while some stocks are growing, even if one certain aspect crashes, you have a buffer. So definitely invest across a lot of stocks and also invest across a lot of stock types, including, ETFs, mixed stocks, bonds, and even alternative assets such as real estate, as this truly diversifies your portfolio. Now let's move on to long-term investing. And this type of factor is often overlooked by investors because we as humans, of course, want short-term gain in a very short amount of time. And in this scenario, we're unfortunately starting to lose money. And if we were to look at the long-term advantages and benefits, we would have made more money, hence bringing us back to long-term investments. Now, you see, the stock market has historically grown over time. And that's why we have seen companies such as Warren Buffett's Berkshire Hathaway have almost 20% persistent returns on their shareholders' values every single year, because they know that this factor is true. No matter what the stock market is doing today, it is bound to grow tomorrow, as past historical data shows. That's why if you are to invest in a long-term pattern, you will be more likely guaranteed better returns. Now, how can you apply long-term investing strategies? Well, first, identify fundamentally strong companies that have a good future and basis. For example, if you were to look at Apple as a stock, you could see that they're investing heavily in many different fields, whether it be developing their own vehicle or whether it be artificial intelligence. They have a future that could actually return more value to you as a shareholder. Furthermore, focus on compound interest. If you try and maximize dividends, and when we look back at examples of Apple, we can see that if we were to invest in them, long term, we will be making more profits due to the dividends that we're earning from their returns and revenue. And of course, dividend means the return to shareholders given by a company because they held their stocks. Now, last but definitely not least, let's analyze one of the most important factors of the stock market, and that's risk management. You see, understanding and assessing risk is absolutely imperative if you want to be successful. And according to the CAF, the investors involved within the stock market always should analyze risk and returns in order to ensure they're making the best decisions. You see, a younger investor, for example, might take more risks and make their stock portfolio crash more one day and then have very high returns another. However, a more experienced investor might actually learn and adapt, ensuring that over time, they are actually focusing on what would happen in the worst case if the stock market were to crash. And some key risk management strategies include, of course, using stop loss orders. Now, if you're not familiar with stop loss orders, this can help ensure that you are limiting the amount of money you're losing. Basically meaning that once you set this order, your stock will sell at a certain price and you will get a good return if the stock was to crash. And second, never invest more than you can afford. This could put you in a lot of financial risk, and this could mean that not only is your wealth in the stock market affected, but in real life you could go into a lot of debt. Now, as a conclusion, you must utilize these three strategies, whether it be diversification or whether it be the idea of using long-term investing or whether it be risk management. It is very beneficial to apply these if you're a new or even a mature stock investor. And if you want more resources to learn about this, please visit these sites as mentioned here. I thank you. Here are my citations, and I hope you the best on your stock market investing journey.